and what he has on his mind. So let's first start with the Senate. Trump here is talking about the filibuster, but there's another thing that John Thune, supposedly, I don't know the full details, but supposedly Senate Republicans now are talking about also replacing John Thune. So Trump said, how much abuse can the Republican Senate take from the radical left lunatics in the form of Democrat senators before they blow up, terminate the filibuster, and approve things at a record clip, including the Save America Act that would be unthinkable without filibuster termination? The Dems will do it on the first hour of the first day. Do not be
Thanks.
stupid.
That's one of the longest questions ever.
Okay. Then we have this new storyline that broke.
One of the longest questions ever. All right. Sorry, I'm a little late today. Just a bunch of phone calls. It's not many people, so we'll just get started. Believe it or not, you have gone over 20 million shares of Railtown. 20,018,784 shares of Railtown. 20 million shares. I'm astonished. It's unbelievable. It's unbelievable. I'm going to write this down. Jason, how are you, Jason? And Jason's brother-in-law just picked up 10,000. That's awesome. That's great news, Jason. Steve, unknown stuntman. That's awesome, Jason. Steve's getting ahead of himself. Next stop, 72 cents. I don't think it's stopping there. I woke up with an idea, which we'll go through. I don't know if I'm smoking pot, but the magnitude of what Railtown might be, and admittedly, we need to see proof of concept. We need to see broad acceptance of Railtown as being what I think it is. Well, I'll sign in later. In terms, Steve, of where I think it's more likely to futz around down in here and stop at some of these lower numbers. But if it gets to 72 cents, I don't think it's stopping there. I don't think there's any resistance after 72 cents. So, Ricky Brogan, hi, Willard, and RT Crew. Hey, Fast Eddie, good day, sir. Yeah, Eric, 20 million cash cows. 20 million cash cows. 20 million rail cars full of cows. Pretty amazing. I'm astonished, but it's kind of shows that it's been going on quite a long while too. Giuseppe, hi William and everyone, we are here. All right, all right. Wow, Jim is moving. He's moving up. Um, 700 shares. That's awesome. I think you're going to be surprised how valuable 19,000 shares are going to be. Every position is going to be, I think, valuable. Ricky Brogan, MJ 10924 told me on StockTwits yesterday after he went off. He said to tell William to put his share count at 207. So it's somebody. I don't recognize MJ10. I'll write it down. MJ 10924. Well, if he's given it to me before, I have it written down. I just don't recognize it. So I might not add it if he's already given it to me under a different name. I don't want to double count, but thank you very much, Ricky. Hi, Donna. Hello, everyone. Donna says E. Belanger added 380. All right. That's great. Jason Harbison, Bell Canada says they have already pre-sold all the capacity in their new data center being built in Saskatchewan. Well, there you go. I mean, when people, and I think about it all the time, I lived through the dot bomb crash and I've lived through other bits of over enthusiasm. But I think there's a shortage of capacity. But I want to get to an idea that I woke up with, and I asked Ward this morning, and he didn't laugh me out of the off the phone, but it occurred to me as a way of looking at what Railtown is. Of course, I don't have the exact terminology, and the definitions keep changing. And frankly, all those smart boys and girls in the AI software, ADK, orchestration framework business, I think they're making up terms as they go along. But they know what they have, and let's keep going so I can show you what MJ worked through his vacation, so he got double pay a few weeks ago. Good for him. Jason Harbison have been looking into the team at All Stark. Sir Terry Matthews, all heavy hitters in Canada Tech. Yeah, there's a lot up there. And that doesn't say Stark, does it? It says Slark. My eyesight. Akira Nova, let's giddy up, Railtown, yeah. Pat M. Hi, everyone. Hi, Pat. E. Belanger. 11 more. Oh no, you didn't do it yet. Yeah, I think you're close to a new milestone. I'd have to look. Um, Unknown Stuntman, dang it, I had 10% stake for a day or two. Think I'm good for now. Yeah, you are the whale in our particular sea. Um, you are, but that's how it always goes, Steve. The law of large numbers always seems to be that way. There's usually somebody that has, a big piece. But I would guess that if I took the top 25 holders here, it might be 80% of that. I would guess. And maybe it's top. No, it wouldn't be the top 50 holders. Top 50 holders. Um, William, this is why you should at least be on Stock Twits if you don't post anything. Good community on the RT board. Yeah, but that's where all the tricksters thrive. But yeah, all right. I don't know how to. I've looked up Stock Twits. I don't know how to use it. Um, Giuseppe, Mag 7 earnings yesterday, and their cap X growth is impressive. Yes. Look, I think the idea that it's a bubble is possible. And the idea that the earnings spreads are, I mean, the multiples, sorry, are too high. That's possible. But um, yeah. But what offsets it for me is the amount of spending. And I really do think the whole world is intent, unless we have a major event that sends us back into the Stone Age, so to speak. The whole world is intent on moving into this new frontier. And it'll be volatile. There'll be winners and losers. There'll be companies that you hear of and then they disappear forever. And of course, we've got to be alert that we don't get caught up in any manias of it. But the spending on data centers and on capacity, which is sold out, only works if the stack works. And my premise is that Railtown is critical to that stack. Are there other competitors? Yeah, Google ADK. I guess Amazon's trying to do something. But the big companies don't. It's not just a function of money, which they have. It's not just a function of having the best engineers and big rooms full, which they have. It's also time, and it's also where do they focus their engineers and their monies and time, because it is an arms race. Some of these big companies are not going to stand alone. I don't know when, but I personally don't think so. I think OpenAI will either be bought out or it'll be another loser situation with Facebook. But I don't know. I mean, they're very talented. They have a popular product. So I don't know. I'm just guessing. But I think the big winner is going to be Anthropic. I think Anthropic's going to be your Anthropic has the potential of being the world's largest company, in my opinion. But there's a lot of gaps in my understanding of AI. But I read that article to you the other day, and the global trade, global transaction business is over $40 trillion, and Bitcoin doesn't have any of it. The dollar is there, and of course, Apple Pay and all these other things. But these are human to human transactions for the most part. What AI is, an agentic AI, is these agents, your agent working on your behalf, are going to go out and interact with other agents out there, maybe selling courses in I don't know, courses in how to have a better marriage, whatever. But your agent goes out. These are all the pitches. They meet the criteria. They bid and buy, and then you sign up for the course. And the agents are always working, but they're always spending tokens. It's tiny, 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 but it's so much. I really think, look, money is not currency. Money, people have some standard definitions of what it is, but no one really knows what money is. I suppose it's a lot like no one really knows what love is, but you get the idea. But it's very hard to say what money is. In a prison, money's cigarettes. In parts of Africa years ago, it was cows or whatever. In this modern world, since Bretton Woods, it's the dollar. It's the U.S. dollar. Prior to that, it was the pound sterling, pretty much. There were other currencies, but that was when we were on a gold standard, a mercantile standard, and it was with John Maynard Keynes, the Depression, World War II. Every country on the world was obliterated, and the United States had everybody's gold, and we had all the factories which had been tuned to make a tank an hour, for example. We can't make a drone a month anymore. And so we bestrode the world like a colossus. And the dollar was king. The Chinese used to call the dollar good as gold, or the golden dollar. I don't think they call it that anymore. So anyway, now we're going into a brave new world. And I don't think it's just going to be defined geopolitically. I don't think it's just going to be defined as I worry about by declining supplies of inexpensive hydrocarbons. I think it's also going to be defined by AI. And if AI agents start taking over most of the tasks that humans do via agents those humans create, and then start interacting with other agents, I mean, I would hate, I've just had a hellish time with these transfer agents. I would imagine you're not going to need transfer agents in an age of AI. People, I don't know that you need these sprawling wealth advisor firms anymore, because a great deal of the business could probably be handled by AI. I don't know. We don't know how it's going to settle out. Movies are starting to, they're horrible, but when you'll log into a movie and it's just AI. It's all AI. They're not great yet, but they'll get there. But it's agents spending tokens with other agents, and it'll go on 24/7. They'll never sleep. It'll bring the cost down so that billions of people are doing it. But every time those transactions happen at TELUS, on the TELUS NVIDIA stack, every time those agents spend tokens on that stack, revenue is generated and it's split with Railtown. Every time. Every time. What if Railtown's proof of concept is so massive that Railtown is on sovereign data centers around the world? I mean, it's amazing. And I read that article from Anthropic about Anthropic to you. I think that guy made a really good case that Anthropic's tokens, and I can't tell you why theirs are so special, really could be the next dollar. It's neutral. It doesn't vary. It's measurable. I mean, I'm sure it'll vary over time and purchasing power and all that, but it maintains its value long enough through a transaction or through the year that it qualifies as money. And it's a unit of account. You can audit it. It's divisible. It lasts. It's durable. And the only thing it seems to be missing, which is a key ingredient of money, is that everybody agrees it is money. But I think that might come. I think NVIDIA's earnings 520 are going to kill May 20th. Yeah. I mean, he predicted at the last conference that his revenues were going to go, or was it earnings? I think it was revenues, were going to go from an annualized $500 billion to an annualized $1 trillion in 6 months. So I think you're probably right. Belanger, every 10K is a new milestone. Yeah. Every I don't know how to say if I'm just looking at this 20 million. It's amazing. Giuseppe, I just can't get bearish. Well, that's what they said in the Nifty 50s, the Nifty 50 stocks. That's what they said about radio. That's what they said about the rails. That's what they said about airlines, although airlines have made a comeback. That's what they said about the dot bombs. So things get out of whack in the short run or medium run. We're all human. We by large part do join in and do the same thing everybody else is doing without thinking. Or even if we think, we're more comfortable being in the crowd. As far as I'm concerned, you can have the crowd. Ricky Brogan, you could at least read the post on RT. I don't. All right, I'll try, but I've tried several times to navigate sub twits or whatever it's called, and you end up on Reddit, which isn't twits. I All right, I'll try to do it. Unknown Stuntman, but my cost is relatively high considering how much I've been buying under 35 cents. I'm roughly at 41 cents. Well, that's going to look so cheap. It's going to look so cheap. And I do remind you that one stock, for example, if you had hung on to your ZJYL, it would have evaporated and you wouldn't be able to buy very many shares down here at 35 cents. So my point is, it's valid to say that your cost basis is 41 cents. But if you hadn't acted when you did, I mean, you got some stock at 22 cents or 23 cents. I guess you just bought it as it went up, which I don't have a problem with. There's people out there that'll tell you when they're looking back. Remember, Tony bought, he was proud of it. I think he bought a bunch of stock at 58 cents, 54 cents. That was me. So nobody gets it right. They claim to get it right, and they look back and, obvious this, obvious that. None of it's obvious. Only when you look backwards. But I think you're about to see, Steve, I don't know when. It could be another month. It could be another quarter. But I have a feeling it might be around the corner. It might be fairly soon. You're going to see why it was smart for you to buy the stock even as it was going up. You're going to see, look, there's going to be two ways this stock gets to $5 or $6. One is going to be, shuttle step, catch, back, catch, it's going to be a fight, a slog. Or the other way, it happens very quickly. But I think 41 cents is, you're right at where the stock broke down in November, 41 or 42, something like that. And if I had to predict, that's going to be an area where some selling comes. I hope not. But people are people. And that's where it broke down for December, January, February, March, April. But once we get back up through it, I think we resume what you were buying into last summer. And I don't think it slows down. So I think 41 cents is a great price from that perspective. But it's, what is it? It's 20%, 25% higher than here. So it particularly with a large position, it's difficult to look at. But I think it's great that you've been buying and gotten the average price down. The only other thing you could have done, particularly in a taxable account, is wait 31 days and then sell some to take the tax loss. But then the problem is you got to wait another 31 days to buy that back. And Steve, looking backwards, nothing happened. Nothing happened in November. Nothing happened in December. Nothing happened in January. Nothing happened in February. Nothing happened in March. And it looks like very little's happening in April. And, we might go through May, might be like that. I don't know. But at some point, it's not going to be like that anymore. I don't think people understand how much. The other day I called it an on-off switch. I don't think people understand just how important a handful of things. One, you get rid if we ever get to the point where there's a blanket over all news and that blanket's lifted, that's huge. Two, if we ever get to a point where TELUS actually says, hey, we want all the business in the world coming. Right now, they're not running at capacity. Nothing near it. So whenever it is that they actually, hit the on button, I mean, it is running. This is where the negative people can come in and say, well, it's open. Yeah, but they're not. They've got 4 or 5 customers. They can handle. I heard that TELUS Sovereign AI Factory, maybe with Kamloops as well, they could handle all of Canada's business, all of it. Now, I mean, it's all growing, but I think TELUS, whatever you want to call it, pulling the lever is going to be huge. And there's a lot of reasons for that, but not the least of them is revenue is going to be monthly. And I think you have a chance that TELUS's revenue grows dramatically and Railtown just goes along with it. The other reason is it's a proof of concept. So if the tech people, we don't know, we come on, we look at what the shorts have done to the song Ma. Look what they've done to my song Ma. And we don't know, but the techie people do. And if they see that it works and it's better than, my opinion, better than, say, a Lang Chain or something, all of a sudden business is blossoming and they have more orders than they can say grace over. So I think TELUS turning, whatever you want to say, hitting the on button. I know it's already on. So what do I call it? Ramping up maybe. And also the blanket over the news getting up. Those are 2 huge things. The other thing is possibly, somebody told me this weeks ago, and I'm so negative on NASDAQ, but possibly another trigger would be if Railtown went to NASDAQ or New York, or if Railtown went from the junior market, Canadian Stock Exchange, to Toronto. I have no idea if they will, but that might be if you want to call it a catalyst, that might be. What would be amazing also is if the TELUS deal, remember, this isn't like going out, investing in a company that has an idea for a new drug, and you get in early because it's such a great idea. They're all geniuses. And then they spend the next 7 years creating this drug. It's not like that. It's not like somebody saying, hey, I have a great business model. We're going to create mobile phones. And then you have to walk around with a piece of balsa wood in your pocket, selling it to the world that this is going to actually work for a decade. It's not like that. It's not like a new mining operation where you know where you want to mine, but you got to get the permits. You've got to do the seismic. You got to do some a preliminary drilling. You gotta build the roads, build the transport. You've got to design the mine. You've got to, et cetera, et cetera. It's going to take a decade or 20 years. It's not like that. It's not like a new oil and gas field where you know it, but you got to drill a bunch of delineation wells, and then you've got to bring in the offtake pipeline or however, usually pipeline, could be truck, but it can take 3-4 years to get a project up and going to where the fruit the fruitfulness of the efforts is shown. It's not making a movie. We'll raise a bunch of money. Now we have to get the actors. We got to write the script. We've got to find the location. We've got to put it all together, and it's going to take 18 months to 24 months. It's not that. It's not building a highway or creating a plan to go to Mars or building a data center. It's not even that. We got to go buy the land. We got to source the materials. We got to get an architect. We got to make sure the grid can take it. We got to grease some politicians' palms and so on. It's not even that. What Railtown is right now is whenever TELUS decides to ramp it up, to pump up the volume, the stock goes from nothingness to being well known. And the key is revenues. You don't see any revenues now, and it bothers you. Well, that's how the dot bombs did it all the time. They went and got market share, and they didn't have revenue. Amazon followed that model. But here, revenue on TELUS will start month one, if it hasn't already. I bet second quarter we're going to see revenue. Of course, that takes a while to report. But we're at the back ass end of everything. The information is going to spread like wildfire among the hyperscalers, among the stacks, among the investment bankers and private equity before we even see it. But luckily, we own our positions. So anyway, I really think it's an on-off switch, and I think you're not waiting forever, but you feel like because you've been waiting that everything's going to be gradual. It's all gradualism. I think it's going to shock people. But we'll see. So I think the catalysts that I would project are TELUS turning on their whatever. It's already turned on, I know. So TELUS saying, let's rumble, whatever you want to call it. And I think the simultaneous lifting of the news blackout, those two things are going to be huge. And then it should lead to immediate revenues and projectable revenue growth, and maybe some viral growth in users outside of TELUS, who knows? But it also should give a proof of concept that just might have a dozen or 24 or 50 other data centers say, hey, we want some. So proof of concept would be another critical thing. And then you get, as the stock goes up to 5 or 6 or 10, you're going to break through various barriers of people who cannot buy the stock. I mean, this is after the news blackout, but a lot of these institutions run the market. We all put our money in mutual funds. We all put it in ETFs. And if you go to an advisor, they're going to recommend a money manager or a pool of money or ETFs. And so until institutions start buying, nothing can achieve its full bloom. But a lot of institutions cannot purchase anything under $5 or under $10. So as we climb up that and get into those higher numbers, that could be really, then you could start seeing confirmation that you won't even need to listen to me. The other thing is, whether it's public facing or internal, when the research analysts start turning their attention to it, I think the case will be so compelling that the price takes care of itself. But like the guy said the other day, we don't have any revenue. Well, that's true. It's true. We don't have the story being told anywhere, although Corey's supposed to be talking now. We don't have people that know the story being able to buy because of material non-public information. We don't have whole swaths of Wall Street that even have ever heard of it. Therefore, they're not buying it. And then all these big pools of money, it's not worth their time to focus on stocks under $10. They can get fired if they make a mistake. They don't, it's very rare you get fired if you just blend in with all the other losers and everybody's buying the same 6 stocks. You don't get fired. So these things haven't happened yet, Steve. And in the face of it, every single day, I don't know where you're buying your stock, but wherever it is, your shares are in street name in a big blob at the DTC, in the firm's big holding at the DTC. And then they're lending those shares out and allowing the sale of non-delivered, non-located, non-borrowed shares to occur every single day. And it's a matter of course, as a right. Nobody does anything about it. So those are the dynamics. Now you paid 41 cents. Actually, you must have paid more. Well, I think it's a great price. It's a great price. 27 cents a couple weeks ago is a great price. And if I'm lucky, it stays down here. But it's hard not to use the training just almost by absorption that you've gotten on all the chat rooms and all of the X's and all that. It's all day trading thinking. It's all day traders' thoughts. You're not a day trader, and you don't have to think that way. Your account doesn't always have to be in the green. It'd be nicer, but there's very few people that can buy something right at the bottom. So you build your position. You have a great position. And 41 cents, I don't know what you're down, 25%, which sucks. But before, your cost basis was probably 50 or 55, so you've improved that. But you kind of have to welcome it if you're still building your position. if you're not, you kind of got to just say, F-U-C-K. I wish I had waited, or I wish I put my money in at a lower price. But the fact is, if you had waited with ZJYL, your money would have pissed away anyway and wouldn't be there. So there's no perfect ownership. There's no perfect entry point. There's no perfect way to get into a position. And most of us here, I would blame it on me, have been in here for a year or maybe longer. And it's been one, I don't want to use the word delay, but it's been one long time. But we've built up our position to 20 million shares. That's a positive. And I think we're lucky that behind the scenes, my sense is the story's just getting better, bigger, and more beautiful. So I guess I'll just summarize, Steve, by saying to you, you should embrace that your account's in the red if you're still adding to your position. If you're done with that, it sucks to be a little bit underwater, but you should also be grateful that you're in it. You're in it. You have your position. I mean, if you'd done it a little bit better, maybe you'd be at 10%. But those things aren't going to matter to you in the future. Once it ebbs and flows, and I would say it's going to ebb and flow before your account is in the green. And then after your account's slightly in the green, I think it's going to ebb and flow. And it has the potential to be volatile as it tries to get over 1, tries to get over 2, tries to go up. So you're going to experience, if you choose to look at it that way, you're going to see some frustration. However, once your account goes green, and if you can now we can't just be blind to risks, but right now, if you can just avoid selling anything, your account's going to get up to a point, Steve, where, let me put it this way. If the stock went to 82, let's say by June 15th, you double your money. Right? If it then went to $1.64, you've made 4 times. You're up 4 times. When the stock gets to 5, 7, 10, 15, 20, 21, every single day that the stock goes up 41 cents, you're making 100% return on your original investment. And that's coming. That's coming. You won't even remember that you could have bought it at an average of 34. You won't remember. Every single day it's up 41 cents. You're doubling your original investment. And there's going to be days when it's up dollars. I think you're sitting pretty. I think it's fantastic. Steve, how does anyone do accounting on a $5 trillion company? Well, they use big sheets of paper. Joe Marty, man, I'm so yellow, Steve. Yellows. Justin Babbage talking about lowering your cost average. I always have to pay commission, and my profile calculates the $5 extra I've spent, like to buy at least 1,000 per transaction. Yeah, I I grew up in a world where you always had to pay commission, and so that's one of the reasons why I'm a little more cavalier when you're seeing a spread. I don't have it here, but if you're seeing a spread of 32 cents to 35 cents, and somebody comes on here and says, I want to buy it at 31, you might get it. I have my order in at 32. To me, it's like, just go ahead and put the order in at the S. They're not going to fill you there anyway, but it's cheaper than the commission that many people have to pay. But somehow I have to get it in everybody's head. There's going to be days when this goes up $10 million a day. And if we use Steve's number on 20 million, we've got 8 million here. Cost basis, 8 or 9 million. There'll be days it goes up that much a day. There'll be days it goes up 3, 4, 5, 6 times that and stays there. So I think the real thing to do is to focus on the number of shares you have and can buy. And yeah, the friction of commission sucks. It sucks to have bought it as it was going up. And other people did too. Otherwise the price wouldn't be up there. But people didn't want to miss what was coming, and that's still coming. Whatever that is still coming. Ricky Brogan, congratulations, Steve. Giuseppe, did anyone come across that story with agent-to-agent communication, and they started their own communities, religion, etc.? Wow, that's kind of scary. They were aware of humans watching, coded their language to hide intention. Oh my gosh. Skynet is alive. It's kind of scary. Dystopian. Richard K. All right, here's the asshole, Richard K. Here we are at May, and Railtown is still in the doldrums. We haven't seen 50 cents since last October. MMTLP will come in before this takes off. How much you want to bet? You want to bet 50 cents? What is the come in about MMTLP, by the way? Richard, why are you even here? You want to go suck your thumb because you lost money in MMTLP? Go suck your thumb. Just go do it alone. You don't have to come here and share your misery and your shitty attitude. I'm sorry you lost money in MMTLP. That was your choice. It wasn't your choice for the FINRA to be corrupt and for Jessica Hopper to stop trading. But that's what happened. You're a big boy. You were going to take credit and brag when you made money. So when it doesn't work out, you don't want to take responsibility for it? Go cry somewhere else. You have no idea what Railtown is. You're a lazy investor, and you just go with trends, go with the crowd, and you're playing for squeezes. It's a mug's game. If you knew what Railtown was, you wouldn't be spouting this shit. Here we are in May, and Railtown is still in the doldrums. You know what? What's great about it? in June, I think I was at 2 or 3 million shares on this board. You guys have built a huge position. So it's a positive. But you're a dick because you don't know what you're doing. There isn't a successful investor out there who didn't go through periods of time where investments that they saw ahead of the rest of the community didn't go underwater. So just take your poison elsewhere, Richard. Ricky Brogan, have to do a lot of core drilling to find coal. If you're lucky, you find a seam of coal, then they might not have a lot after all the work and costs. Yeah, in other words, it's a thin seam. Yeah. MC85, if we're right about RT, I wonder when the first investors will jump in before earnings are reported. In other words, when will like a wave of investors come in? I don't know. My guess is, MC, it'll happen as the stock's going up. When it goes to 5, everybody will be buying it. And there might be some mania, volatility, which would be, if you're talented at that might be fun to trade. I just don't recommend trading it because, if this thing spikes to 5 or 6, it might pull back. But for all you know, the following week, it could be 12. The numbers are really big. And of course, people want to see it every day. Well, that's not how it works. It's not how it works. Steve, great song, Pump Up the Volume. Ricky Brogan, I would rather have a bird in my hand than 2 in the bush. RT is that bird and ready to fly for the first time. Well, I think you're going to find out that RT has many more birds than one. MC just saw that RT was founded in 2011. What have they done over the last 15 years? Railtown? I don't think that's accurate. But you might be right. But I don't think it's accurate. I think they, and I'm just doing this from interviews I listened to, and I've actually done due diligence on the company, but you could be right. But the company was founded by Marwan Haddad and Corey Brandolini and Rambling Jack Elliott, Dr. Elliott. Approximately 7 years ago, 6.5 years ago. And how it was founded was Marwan and Corey had in their careers worked together. They had also sold, the whole group of those guys collectively, they sold something like 5 out of 6 or 6 out of 7 companies to bigger buyers, one of them being Microsoft. And so these guys, they have money, they're skiing, probably in Banff or somewhere. And I think they were skiing. I might have been mixing it because a friend of mine was skiing at the time. But anyway, over a cocktail or over a chance meeting or over an arranged gathering, they sat down and they were remembering the software companies they built. And one example is, do you remember when a virus would attack our software or code got wrong and the whole thing would crash. We'd have to have an all hands on deck and everybody would have to work furiously for weeks and months to make sure that the software didn't crash. And they said, why don't we try to fix that? And the other guy said, yeah, I've been thinking about that same thing. And one or both of them said, well, we do know that the world is moving in from software as a solution, SDKs, into AI, agentic software, ADKs, and all the world is waiting on is huge computing power, huge computers. And they're coming. We know that because we're in the business. But the investing world is not aware. The investing world is focused on electric vehicles and that oil is going to no longer be used in any way in society. And they have to have DEI in every board of every company. The investor world is focused on other things. So why don't we, instead of building a solution for SDKs it'll solve it, but it'll become obsolete. Why don't we build it for the future? We'll be early, but let's be ready when the tide turns. So they loved it, finished their booze and went back to their girlfriends and said, how are you doing? And a few weeks later, they got together. One of them, probably Corey, but maybe both, they called up their friend at Microsoft because they had sold a company at Microsoft. And they said, hey, are you guys doing this? Microsoft does over 90 or did over 90% of touched 90% of the SDK, software developer tools in the world. Are you doing this? No, we're not, but we love it. Are you doing it? Well, we've been talking about it, but we didn't. Well, look, guys, if you want to do it, why don't you bring me a white paper? So they spent 6 months designing their white paper, wrote it up, examined it. They're smart guys. So they knew it cold. They gave it to him. And he said, we love it. How can we help? And they made sure they had intellectual property protections, which is an ongoing process, and that they had non-competes, et cetera, with Microsoft, which is probably not, I'm not impressed with those things because unless you can defend them, if the other side is dishonest, you got a problem. But anyway, so in a presentation, I'll let Corey or Marwan describe how Microsoft helped. But Microsoft was essentially, we're not going to do it. We're interested. How can we help? And Microsoft became embedded in Railtown or vice versa in 3 sales channels. And Railtown's compatible with everything Microsoft does. So then they started their company, and it's like anybody, it's private. They're funding it. They get friends and family. And then they needed to raise money. And my opinion, MC, I'd have to go research it. I read every single filing that I could find last year, and I did it several times. But I have no vivid picture in my brain of what I'm about to say. I'll have to go look it back up. But I believe the way they went public was by a reverse merger. I think they put their company into an existing shell, and that shell might have been established in 2011. I don't think it was Railtown per se. It wasn't that idea that those two men had. That's my answer to you right now. If I'm wrong, of course, I would acknowledge that. But you don't have the willingness to pull out a computer and go back through old filings. So all I can do is give you my sense of it after having studied it, but I can't quote no Dickens, can't quote no Keys. So anyway, I think the 2011 is the date of formation of the company they reverse merged into. That's my opinion. What they've done for 15 years is the same thing they've done since the 1980s, being immersed in software and technology and engineering, creating several companies, building software teams, and then selling those companies to bigger companies like Microsoft. And you can go and see that on their CVs the various dates, but I don't want to do it right now. It bores me, but you will find out that they were working somewhere else in 2011. Ricky Brogan, MC, I think it was a spec stock before Corey and Marwan. All right, well, so that's some confirmation. Corey and Marwan met at a ski trip. All right, so we're gonna have to look this up. Gonna have to spoon feed it. It just takes so long, MC. It just takes so long. Okay, so Railtown. Filings. I guess I'll go with the Cedar filings. They have 449 items. So November 16th, 2011, preliminary prospectus, Railtown Corp. So MC might be right. I found the preliminary prospectus for Railtown Corp, November 16th, 2011. The purpose of this offering is to provide Railtown Capital Corp, the company. So he may have started Marwan is a financer too. All right, so let's read this. It's 10 cents a share for 5 million shares, $500,000. The purpose of this offering is to provide Railtown Capital Corp, the company, with a minimum amount of funds with which to identify and evaluate businesses or assets with a view to completing a qualifying transaction. Any proposed qualifying transaction must be approved by the TSX Venture Exchange. Sounds like a SPAC, a miniature one. All right, so let's see who was a member of this team. So maybe he formed a capital company, and then they came up with the idea of Railtown. There's different names. They have Railtown Technologies. They have Railtown. Um, there's another company division called Railtown in there. Principal business of the company will be the identification and evaluation of assets or businesses with a view to completing a qualifying transaction. The company has not commenced commercial operations and has no assets other than a minimum amount of cash. And it was founded by Jason Moreau, President and Director, William Benjamin Catalano, Director, Alan G., Director, Martin Woodward, Director, Jane Woodward. All right, I don't have time to go through 400 filings, but let me just see if Google will answer it. When did Corey Brandolini and Marwan Haddad reverse merge into Railtown Capital? See, this is wrong. I just read to you. They had nothing to do with the first company. All right, so it says Corey and Marwan did not reverse merge. They incorporated Railtown Capital in 2011. I just read the names. They're not even in that. Maybe I didn't read enough of the prospectus. And Railtown Capital later pivoted to become Railtown AI Technologies. It was a capital pool company on the TSX. Railtown Capital Corp underwent a reverse merger with Tiernan Gold Corp on December 16th, 2025. Here's an article just came up. Railtown AI Technologies offers software engineers a co-pilot to help navigate the turbulence of development. It's written June of 2023 by Andrew Kessel. Artificial intelligence is everywhere right now, and in the tech sector, thousands of entrepreneurs are looking for a way to plug AI into their business models. The problem is that anyone who's gone back and forth for more than a few minutes with a bot, such as ChatGPT, knows one thing: the responses are full of errors. For AI to be truly useful, it needs to be trained effectively and have a defined purpose. Railtown AI Technologies has not one product, but three designed for software developers, and it meets those criteria. The company's proprietary AI has been in stealth development for 3 years under the direction of Chief Executive Officer Corey Brandolini and Chief Technology Officer Marwan Haddad, a pair of self-described software geeks who became fast friends at a previous company and partnered up. Their raison d'etre is making it easier for developers to create new software and manage ongoing products. The first offering is Railtown's root cause analysis copilot, which is designed to detect bugs within applications and then quickly pinpoint the root cause of the errors and the impact on the application. Right now, 40% of a software engineer's time is on average spent identifying bugs and fixing them. It creates an enormous manpower challenge, according to Haddad. He and Brandolini once installed a fire engine light in the bullpen at their previous company that would go off whenever an issue arose. Senior engineers would drop everything to figure out what was wrong, at times taking hours to diagnose root causes of errors and the impact they have on the application. This resulted in delayed deliverables and pushing schedules behind. The root cause analysis tool eliminates the mad dash to comb through every line of code. The root cause analysis copilot hooks into the developer's machine where it spots errors before they reach production and immediately determines the root cause and the ticket where the problem originated. That's why Brandolini says the company doesn't design bots. It builds co-pilots. No matter how strong your team is technically, no matter how senior your developers are, when you are building complex applications, they are still fraught with functionality, logic, and syntax issues. We've got it to the point today where AI can do a ton of heavy lifting for you. The British Columbia-based company has also built an application to streamline the process of documenting product updates and enhancements, which are known in the industry as release notes. Writing release notes takes an enormous amount of time for a team lead to produce, as they have to sift through dozens, if not hundreds, of completed work items to summarize. And then they write digestible release notes, which can be consumed company-wide. This is where Railtown's release notes copilot comes in, as it continually analyzes all new software deployments, as well as any changes made to software, which will trigger the copilot to automatically generate comprehensive and accurate release notes. The net result is saving hours of developer time. Root cause analysis copilot and the release notes copilot are now available to over 400,000 Microsoft partners on the Microsoft Azure Marketplace and at Railtown's website. Then there's Scrum Master, currently in the alpha stage of development, which could be Railtown's crown jewel. Scrum Master is the co-pilot in the truest sense of the word. Utilizing Railtown's AI engine, the Scrum Master co-pilot can provide reason-based answers related to a wide range of topics, including work items, deployment issues, build errors, bug fixes, performance issues, and much more. Developers can ask the co-pilot specific questions or describe the problem that they are facing, and the co-pilot will provide relevant and actionable information to help solve the problem. Brandolini calls Scrum Master a targeted language model, in contrast to large language models such as OpenAI's ChatGPT or Google's Bard AI. Integrating Railtown's proprietary AI into development teams' builds, code changes, and work items creates a more precise learning environment than any large learning mode could dream of. Quote, ChatGPT and Bard are trained off of what is already available and free. So any painting by Picasso or book written by T.S. Eliot, they can train their machine on it. But they don't have access to what goes on inside a company's own specific applications, Brandolini says. Further quoting, because our AI is integrated with a company's projects, our machine is now training on that data. Where OpenAI is trained on the internet, our co-pilot understands exactly what you and your team are building and can answer questions in real time. It also keeps a developer's data from being exposed to the broader internet, which means companies get the benefit of AI without exposing proprietary information to the prying eyes of big tech. Scrum Master could even be used to onboard new engineers by delivering to them detailed information on application features and answering any questions they might have. That simply does not exist in the market today, says Brandolini and Haddad, and it wouldn't be as close as it is today if the two had not become fast friends. Quote, we were on a family holiday together in Whistler and sat down over a glass of wine, Marwan says. Quote, I've got this idea, unquote. Brandolini explains, quote, I was like, I'm in 100%. Life works that way by chance. But when both people have the common drive and our goals are the same, then it's instant connection. The plan is to release Scrum Master in the next quarter. Version 1 was like a child in elementary school. Now version 6 or 7 is like a university professor, Brandolini exclaims. It went from learning how to understand what a bug is to where it's now using knowledge and reason to generate answers. Ask any developer if they would like this running for their team, and the answer would be yes. To help make that a reality, Railtown plans to ramp up spending on market awareness and user acquisition in June. And then he says, this is not a bubble. This is just the beginning of AI generation. Artificial intelligence is having and is going to continue to have a profound and positive impact across all of our lives and every business. The question investors should be asking themselves and asking their financial advisors is, what is my AI investment strategy? Unquote. All right, let me see if I can get a more deep dive answer. I don't know which one. I assume it's here. It's not working. Cancel. Oh, it's still. All right, MC. So they weren't the original founders. Let's not be obtuse. Let's see if we can find out what happened. All right, that's not working. Railtown Capital became Railtown AI Technologies. How? Who founded both? When did Railtown AI Technologies start? Let's see the answer. Railtown Capital Corp was renamed Railtown AI Technologies. See, I thought it was a different company, but I didn't even know it was called Railtown Capital. So you taught me something. Railtown Capital Corp was renamed Railtown AI Technologies in August of 2019. August of 2019. So it was not a new company in the usual sense, but a name change of the existing public entity. The company founders listed on its team page are Corey Brandolini and Marwan Haddad, and the other earlier is Dr. Elliot Holtham. The company page on LinkedIn shows Railtown AI Technologies in operation by September 2019. And a market listing notes the company was incorporated in 2011. The clearless timeline is I'm going to have to see if I can show them this. I should have taken a picture of that prospectus. The founders of Railtown Capital were completely different people according to a 2011 prospectus. I mean, does this really matter? I guess it really matters. Guess it really matters. Oh, there's two different Railtown Capital entities. No, it was under their Cedar filings page. Railtown Capital started as a capital pool company. So the original company belongs to a shell issuer structure at formation, which often has a sponsor founder group that is completely different from the latter operating business team. A capital pool company can be created first, then later undergo major changes, including a qualifying transaction, name change, or business pivot. So the 2011 prospectus founders and the Railtown AI founders do not have to match. The most likely explanation is that the legal issuer existed in 2011, but the AI company identity came later through restructuring and branding changes. When Railtown AI Technology started as an operating company identity, the public records point to 2019 as the start of Railtown AI Technologies, current form. Anyway, MC, if you need more in-depth analysis, I suggest you go to the Cedar filings. There's 439 of them. Start in 2011 and just go through them. I just don't see how it has any real relevance to the current situation. But you did teach me that it was, I thought it was a reverse merger. Apparently it wasn't. But maybe they bought that company, or maybe an underpaid wanker brought that deal to them. It was a show, or a capital pool company. Ricky Brogan, since you own 10%, I think you should be on the board for sure. Well, 10% of our group. That's interesting, though. He probably owns 1% of the outstanding shares. That's amazing. MC William told us a while ago. Hopefully, he will say when he reads your question. Yeah, MC is right, or I'm wrong. It wasn't a reverse merger, but I would imagine that it was an engineered. You know, you want to go public. Here's the company. You know, come in, and then we raise some money. I don't think it's the most important question in the world. They did not start it in 2011. Corey and Marwan started this with a white paper approximately 6.5 years ago. It just simply isn't true that they started it in 2011. It's just not factual. Unknown stuntman, down 23%. Wish I could have held paper silver 6 months longer last year. Then bought more RT. I'm not complaining. I'm just talking. No, I agree. Look, I wish I had the silver. Steve, I used to have almost 7,000 ounces of silver. I used to have a house that's now worth $4 million. I used to have a business that I put together that was doing renovations here, and my goal was to have 1 or 2 or 3 a year, and we were doing it. I brought a guy in, went to Dartmouth. He never met anybody. I brought a guy in. I worked with at Merrill Lynch. I brought a young kid in who I met at the bottom line, but I knew him. I liked him, but he had no money. He had no contacts, but he knew how to locate. And he worked with one of the biggest developers in DC, who needed a bird dog. So I don't mind sharing and working with. So I put it all together. I had a female attorney who begrudged me any participation for putting deals together. She didn't understand how, number one, when she had to work hourly or case by case, how can it be that business deals get put together and you make an agreement on the split? She had no concept of that. The other thing is, it was her view that no judge would honor introduction beyond a year. I don't know where the hell she got all this from. It's not how business is done. But she drew up, frankly, crappy agreements. But I relied on her. And at the time, I didn't know that they were bad. But as a later attorney told me, all you needed was a 2 or 3 page agreement. You'd be fine. But she didn't know how. She didn't know it. But I was loyal to her, and she's a good person, and she works hard. And she's not greedy or anything. But being an Irish Catholic, I don't think she grew up in the world of training on money, using other people, all of that a certain aspect of real estate, attorneys, banking did. And they're vicious. They're out, So anyway, Steve, when I introduced those 2 guys together, the deal we had just all of a sudden it didn't matter. And my erstwhile friend from Merrill Lynch started doing deals around me. He claimed he's an honest man, but he started doing the deals around me with the other guy. And I said, this isn't right. Anyway, this went on for a long time. And then I thought it was the other guy. So I brought in another so-called developer, another guy that didn't know what he was doing, but had done a little work. I liked him. But again, my so-called friend we're already wealthy, flits around different parts. He's on yachts and skiing, and he just calls in and transfers funds. Same thing. And we ended up doing a transaction. The only reason this started was because of me. Nobody knew each other. And the initial monies got wired because the Dartmouth guy trusted me. And I put it together, and I worked hard every single project. And it went on for a while. Anyway, it was my vision, my creation. But then, and I was right. I mean, we did a lot, and a lot of money was being made. But the young guy in the first year, he didn't know what the F he was doing, and he couldn't care less. And what surprised me is when push came to shove, the Dartmouth guy said, oh, he's got a baby. Of course he's going to cut you out. He looks across the table. He's got a baby to feed. I said, you're not getting it. I don't have children because I'm trying to make money. But we had an agreement. And anyway, can I just fast forward to one of the last projects was a big project. And this 2 or 3 years of those guys going around me and cutting me out, even though the Dartmouth guy would call me up, have me go to I wasn't making any money, bottom line. So my cash flow went to 0, but of course I have things to pay. And I would say it was something like 30 different projects. I got paid 1 year, and the rest I kept thinking I was going to get paid. Looking back, I should have just said, screw it, and driven an Uber. But I didn't know. And I trusted it, it's just, but the last one, Steve, I would have received my part of it, and I did a lot of work. My part of it was enough to save my house, more than enough. A year's worth of mortgage payments, it would have saved everything. Well, I didn't get paid. So I looked it up. I set up the LLC. I set up the bank account. But And it's my signature on all of the deed and everything else. But I went down to the courthouse and they had swapped the deed out and they put the property in a new LLC and they moved the bank account. So, in my opinion, they stole my money. But you know what, Steve? I lost my house. I lost my house. I couldn't come up with that money. My dad was in hospice, and I don't know. Maybe I had the smell of failure or whatever. I couldn't go to my Dartmouth guy. And then my biggest client that I had devoted 2 or 3 years with, all of a sudden, he that's a different story. The CEO of a company that we put money with introduced my client to a couple of charlatans out of Connecticut. They flew to the Middle East and met them without me. But the CEO had me go meet those guys in the context of helping the company. So I went up, took the train up, went through the rain in New York City, spent 3 or 4, maybe 5 hours with them on a whiteboard, going through the whole company, everything that's going on, telling them what we needed. And then they, being young guys, put it all in a digital presentation and explained the exact thing I said to my client and I should have been there. I told the CEO, what the hell are you doing? But then that guy, they started some sort of investment bank together. And so it was these series of things, Steve, that all of a sudden I didn't have anybody to ask. I didn't need that much. 25 grand would have done it. But that project, it was a lot more. I sued them on that project, and I'm not a person that sues, and I won. And I got the money, but it was too late. It was 2 years later. It was too late. I got it. I was right. We settled. Of course, that's my opinion. I don't know. They might think they were right. But I got it too late. So my silver dissipated. And there's other stories in there too, by the way. There's other stories. I always looked out for the clients first, always. So I put money that way, and I can tell you stories about that. And then, so Steve, here I'm sitting. That house, $4.5 million. Essentially 7,000 ounces of silver. You can figure it out. I don't have any of it. And all that income gone. And I can look at it like, shit, I should own a lot of Railtown. And I should have done a wood. And I've been angry about it. But there's nothing I can do. There's nothing I can do. I suppose there's other stories. There's so many. I don't want to go through them all. But it just can't be, Steve. It just can't be. So here I am with a small position. I personally believe if I were where I was, I'd have a position as large as yours. Easily. I also had a $2 to $2.5 million account. That's more in the 10 to 15 years ago and beyond that. So I don't know what to tell you, Steve. I can drive myself crazy thinking I'd have 1 million shares. I'd have that. Steve, I put 75 grand in a silver company that got destroyed by the shorts, and the company just merged, and it's doing fantastically for the insiders and in size. At that exact same time, literally, I had a sheet of paper where I was going to allocate money. And I was just such a doofus. I didn't trust hard wallets. But I came so close to investing in Bitcoin. And I could be, good Lord, if I just put 25 grand, Bitcoin was $1. So I don't know, Steve. I know that's a heavy amount of me, but everybody can look at it like, shit, I should have done that differently. The great thing is, Steve, you have a huge position. It's amazing. I mean, I don't know if you think about it at all. You could have more, yeah. But let me just do it in reverse order. Steve, let me go in reverse order. If Rimouski, the TELUS data center, leads to not 2 billion, let's not even say a billion. Let's say it leads to 750 million in shared revenue and growing for Railtown with TELUS, 750 million at a 20% split. That's 150 million, 100% revenue a year and growing. All right, so now let's just assume, now it's a big assumption maybe, but let's just assume that Railtown becomes like, wow, everybody needs to own an iPad. Everyone needs to own a Sony Walkman. Everybody needs to have Railtown AI's platform. Well, if Railtown gets on 750 million a year, that's 150 million in annual recurring revenue, 100% margin. That's one data center. And I'm ignoring the AIP, ignoring that. It's one data center. It's the 86th best data center in the world. Well, that means there's 100 in the top 100. I don't know. Let's say Railtown is so good, it captures an eighth of the top 100 data centers in the world. An eighth of them. 12, including TELUS. So we'll multiply that times 12. That's 1.8 billion in revenue. 1.8 billion in revenue. 1.8 billion in revenue. Not tomorrow. Maybe 2029. And growing 100%. 1.8 billion. Now, here's the leap. The leap is that TELUS does in fact turn on. That two, that Railtown is on top of the TELUS data center. That three, the TELUS stack, NVIDIA stack can scale without any glitches, and that Railtown on top of that stack can scale without any glitches. You got to get through that. And then you have the proof of concept that Railtown is in fact better than all the competition, and it solves a problem that nobody else can because it is the best. These are things we still got to see, but let's assume that's the case. They get an eighth of the top 100 data centers in the world. There's 12,000 in the world. So they have 12 customers. that are similar to TELUS. Okay? That's $1.8 billion a year. Now you put on there, is it growing? Is it going to double every year, triple every year? You probably put a lower multiple on this because people can't believe it's going to grow rapidly, but it might. This is just 12 data centers. I don't know what other businesses out there. There's the robotics, the distributed micro data centers, whatever those are called. There's space. But anyway, if you multiply that times 12, just 12x as a multiple, I think that's low, you get $21.6 billion valuation for Railtown. Now, you don't have to wait till 2029. As long as it's projectable, they will discount the future revenues now. And that's what the 12x is supposed to do. So that's 21.6 billion divided by, of course, they're not going to let me do that, so I'll start over. Divided by 227 million shares. That gives you a target of $95 a share. Now, Steve, I'm not saying that that's going to happen, but that is plausible. That is plausible. That is plausible. I agree. Silver went up. You could have sold it higher and you could still have more shares here now. And I wish I had my silver. I wish I had my bloody house. I wish I had the income. I wish. So you take $95 a share to times a rough number for what you have. I'm scared to tell you. I'm scared to tell you. At $95 a share, I'm scared to tell you. So you know what I'm going to do? I'm going to divide it by 3. So it's like 30 some dollars a share. So we'll take 95 divided by 3. So we'll knock 2/3 off of it and we'll come down to $32 a share. $32 a share times your position is $60 million. Now, if you had been able to buy more shares and round it up to the obvious next number, let's say 2 million, you'd have 64 million. So instead of having $60,800,000, you'd have 64 million. So you'd have a difference of $3.2 million, which when you divide it by 64 million is a half a percent. No, sorry, 5% difference in the total value. But you know what has to happen between now and then? You have to hold on to the whole position. And you know what else? You have to sell it or not sell it. But you have a whole lot of decisions to make. That 5% you might blow or you might improve by not selling. And so you get the $95, Or you might blow it because somebody tells you to sell it at 5 because it's a profit. So my point is, you can drive yourself crazy saying, I wish, I wish, I wish. I do it myself, by the way, Steve. I do it myself. You should hear me talking to people. I do it. We're all human. So you can do all that. Or you can say, you know, gosh, I could have bought, I could have, would have, could have. I mean, you could have bought another 100,000 shares or something, 150,000 shares, 5% more. But it misses the fact that you have so many more decisions ahead of you that you have to get perfect as well for that 5% to ever have any validity. It's all gonna come out in the wash. If you have these kind of numbers, are you really going to remember this? Just enjoy your life. I'm not trying to dismiss your feelings because I go through it. I wake up in the middle of the night. I get angry. I used to really get angry and hurt, disappointed. But over this particularly this Lent, but last Lent, the previous Lent, I decided to not be angry about it anymore, which was hard. But this Lent, I decided to follow all the things we're told to do, like forgive. Even, you know, I'm sure each of those people wouldn't think they needed to be forgiven. So I'm not sure that's the point. But I really am trying not to be angry about it anymore. But you live with the consequences. So I know what you're talking about. You could have held silver and you could have bought more stock. I could have asked that girl to marry me before Doug did. You know? I don't know how to explain it. But you're probably an athlete. You know, if you're a baseball player, and that's one thing I never got a chance to do, but I love it, or tennis. If the ball came right at you and you dropped it, if you go for the rest of the game thinking about it, another ball's going to come at you, or you're going to be tagged out at second. I don't know, Steve. I don't know what more to tell you. Buying the stock and building the position is just the beginning of the decisions you have to make. And my suggestion to you is, if you don't get out of your head, now, I'm not picking on you. I just explained I go through it. But if you don't get out of your head, you're going to cost yourself more than that 5%, or you can make up more than that 5% later on. But bloody hell, to have 95% of your position and it's this significant, I mean, that's might not be an A++, but I would argue it's an A+. It's amazing. Now, I hesitate to tell you what Ward thinks the stock price is going to go to, so I won't tell you. But, I mean, look, it doesn't have to go to those dream prices. If you just went to $15, which is a dream right now, it's going to change your life. But at $15, you basically now roughly have 28.5 versus 30. So you're off I don't even know which side of that equation to divide by. It's the same 5%. So you're right. It's going to cost you, if you get out at 15, selling silver and going into Railtown, which in retrospect looks early, is going to cost you $1,500, $1.5 million. But you're going to have 28,500,000. You could earn 10% at 5% on your money for a year and make that back. We can drive ourselves crazy. We really can. And I don't have anything near what I feel like I should have. It just drives me crazy. I didn't need my life. My spending is very small. And now I spend more on bloody rent and storage than my mortgage. So I have a choice. I can be angry that I was taken advantage of, or I get on with my life. And I think you can get discouraged that you sold silver at, whatever, $30, $40, $50, and now it's $80. But, and you bought Railtown at 50 cents, and it's now, whatever, 35 cents. But these are temporary things. I do think we're going to miss out on silver. I think silver in the next 30 to 60 days could go to triple. It could triple from here. But would I tell you that it makes sense to be in silver now versus Railtown? I think it's very hard to say that, because I think Railtown, just catching up to Lang Chain, which I think is an inferior solution, conceivably could be from your number, from your 41 cents, that's 13x, 14x. But it might be higher than that, because we don't know. There might be another round going for Lang Chain. And it could be double that number just to catch up to Lang Chain. And I don't see silver doing that. It could at any time. If the futures markets, they stand, a significant portion of the people who own futures stand for delivery, silver becomes unobtainable and it skyrockets. And we'll miss that. It's just like right now, if you decided you wanted to go buy Finger because the chart looks good and it's going to have a run, well, Finger might go from $1 to $5. That's 5x. Railtown from 35 cents, $5, it's $1.75. I mean, maybe you can conceptualize that Finger's done that before, but I think if Railtown get anything that gets Railtown to 175 can get it to 1750. This is not a hype job. This is a stock no one's aware of, but the awareness is going to be an aha moment that's not going to just pause at 175. So I find it really hard to recommend. Yeah, it sucks the timing. It would have been better that Railtown did something 6 months ago, and then we could be allocating resources. But Steve, just going back to your, I don't know how much silver you sold, but if the stock were to go to, I don't know, let's say in July, the stock were to go to $15, and I'm not sure I would say to get out of it, but it gets complicated then because you've already had this huge multiple on your money. and you have $28,500,000, you can say to yourself, you know what? I'm going to take this down to 25 million. I'm going to sell enough Railtown to get $3.5 million. Which, if you had not sold silver, you wouldn't have anyway. So you figure, I'm going to sell it down because I shouldn't have sold silver. And I did sell silver, so I bought some shares. But if I could unwind it, I would. I wouldn't have the shares, I'd have the silver. Well, if you did that, that's about an eighth of your asset in your account. It's a little under 12.5% of your account you would shift to silver, let's say in August. Well, let's say silver has gone to $250 an ounce. I look, I actually think that if silver goes there and the market is blowing off, it's a possibility there's going to be a crash in the market, and you'll be able to buy, if you just hung on to cash, you'll be able to buy silver back in that crash lower than 250. But the problem is, I can't picture in my mind, if silver goes to 250, why it would ever come back to 70, even in a crash. So let's leave that eventuality out of the way. So you have $3.5 million, and you buy silver at $250 an ounce. You buy 14,000 ounces. Did you have 14,000 ounces? I doubt it. So you have 14,000 ounces of silver. It'll be volatile. As soon as you do it, you put $3.5 million in at 250, and it goes down to being worth $2.5 million. That's just how it goes. But if you have 14,000 ounces of silver, and silver goes to $20,000 an ounce, you've got your protection. Silver and gold are protections more than wealth creators, although the first part is wealth creation. And if Railtown continues to perform, that was at $15. I don't know why this calculator can't do that simple task. I have to get a different calculator. You would still have 1,666,000 shares of Railtown. And if Railtown continued its march, and let's say it went to my target of $55, you would have $91 million, $92 million of Railtown. And you'd have more silver than you have now. But I think it's even a tough decision then. Because if Railtown looks so strong, the point is, you can't be in both. You can't screw both girls and keep them both happy. You can't marry them both. You can't take them both to the same prom. It's just the way life is. Yeah, you could have built a bigger position in Railtown, no question, if you had waited to sell your silver. No question. But I really don't think it's going to matter. Anyway, those are my thoughts. I'm not picking on you, Steve. I really am not. I'm just I've tried to share a little bit of what I go through. It's what I'm trying to say, what you're talking about is normal. It's normal. And it's impossible. It's impossible to get trades 100% right. It is just impossible. If somebody tells you they always buy at the exact bottom just before the stock moves up, I would say they're not being very truthful. The only guy here, Will Underdown, he can go buy 400,000 shares of Railtown, I think, at the lowest price we're ever going to see again, just before the stock moves. But he's probably not going to, because of the other guys at a point, that Richard K. Sourpuss, well, it's not moving. We've been in it, and here it is May already, and it's just not moving. I'm not used to this. I like my stocks when they move. I don't invest in stocks unless they move. It's really bad thinking. But that's the other thing, Steve. If you didn't act all along, if you didn't get pregnant, you might never have gotten pregnant. You might have changed your mind. You never know. You just never know. All right, I'm going to leave it there. Steve, sorry, Joe Marty, I didn't mean to make anybody yellows. I only have this many shares because of my 401k. I'm allowed to buy individual stocks now. Oh, he's teasing you. He's not. He's very happy for you. Everybody here is happy for you, Steve. Everybody. Giuseppe, conference came and went. TELUS earnings 5.8, RT earnings 6.3. Just some dates to look forward to. All right, I'm going to write those down. TELUS. Somebody else said NVIDIA, May 20th. TELUS earnings 5.8. RT 6.3. Giuseppe, Steve, my average is 41 as well. Average up through 25 and down in 26. I think 41 is unbelievable good price, but you're right, it's cheaper now. I just don't know what to say. My average price, I think, is, and I don't, that's the thing. I don't have the positions you guys have, but my average price is like 35 or 36 cents, so I have it somewhere. I should put it on a card so I quote it correctly, but that's my memory. How far is that really from 41? In 2021, I was in a Verizon store getting a phone. The young guy waiting on me was talking about Dogecoin, and that's when you know it's an inflated market. Dogecoin on crypto now, Ricky Brogan. Well, I actually think the crypto story, two aspects. I tried to read it the other day. One is, I don't think it's a unit of exchange. Well, I suppose it's a unit of exchange, but it doesn't meet all the definitions. I'm just not sure. I've never thought this, by the way, that crypto can take the place of a currency. You could sell your Mercedes for whatever, 1,000 crypto is probably too much, 500 crypto or whatever the hell it is, for 100 crypto, brand new Mercedes. I have no idea. And by the time you got back from your vacation, it would be as if you sold your Mercedes for half price because crypto went down. I don't think that's money. That's one thing. The second thing is, when energy producers and data centers and suppliers fund miners with energy, they're making less money than if they give that energy to the data center for AI. I don't know. Call me a little bit quizzical, a little bit confused. Joe Marty, Steve, I did the same thing with silver, sold some at 60, and PLSV2 soon to buy RT. So hard to get it just right, like Bill says. Easy to look back and woulda, shoulda, coulda. Yeah, it is. But on the other hand, it sucks. I know it sucks. But both with you, Joe Marty, and with Steve, you are in such a powerful position, and the other gentleman that sat there at 41 cents. You don't feel it right now. You just don't feel it right now. But when the stock is, let's say the stock does get to the low 20s, and there's no assurance, nothing is a promise, but let's say it gets up in the $25 range. Every day that stock goes up by 50 cents, and it'll go back sometimes too, but each day it goes up by 50 cents. It's going up by more than you paid for the stock in the first instance. You're not going to remember, trust me, you're not going to remember that you could have bought it at 35 instead of 41. You might remember, and I'm in a situation that I think about it all the time personally. You might be in a position where you say, damn, I could have had that many more shares, and therefore I could have allocated those shares and still kept a larger core position. But them's the bakes. I've never known a trader to get it always right. And I do think each of you who likes silver will get a chance to get back and own a bigger position of silver than you own now. It's just if you're stuck, and I'm not, by the way, I'm not making, when I use the word you, it's the English language. But if you get stuck thinking, well, I'm paying $250 and I sold it at 60, I'm off. But you forget the whole thing's about making money. Your Railtown expanded like your wife did after you married her. No, I shouldn't say that. Expanded like when the car crashes and the thing hits you in the face, that balloon that hits you in the face. So yes, you didn't make it in silver, but you made it in Railtown, and now you can move some over as a hedge. I don't know. I feel like I'm not helping. I'm trying, but I'm not helping. Joe Marty, happy with my RT position. Yeah, and I think that's what I tell myself. Yeah, I'm happy I have one. It's a lot. To me, I consider it very small, and it's not up there with these giants, but I'm happy to have it. And as Ward points out to me, because he's got some real confidence in much higher numbers if the company stands. You can hit some targets even with a small account, which is me, and many of you, compared to these big whales like Steve and Joe Marty and some of these others. Even a modest commitment to Railtown I think you're going to be surprised. But we just sit in the doldrums, picking over the same information. I have something to show you that might get you thinking. I don't know if I'm correct in my analysis, but anyway, let me get through the comments. Joe Marty, the positive of this taking longer is that most of us have increased our positions by 2 or 3 times. That's exactly right. It's inelegant. It is inelegant. And I don't know, to go back to Steve's position, if Steve had started out saying to himself that my 100% position is going to be, I don't know, 2 million shares. And then I'm going to have 1,000 ounces of silver, and I'm going to have some finger slud or whatever, finger motion, whatever, ZJYL. You can approach your portfolio that way and say, well, I have a full position. I've been of the view, and I am still of the view, that it's very hard to find in the speculative and in the high risk and in the junk category. It's very hard to find a better place to put your money than Railtown, including silver. I mean, if silver goes to 210 or 250, it's 3x. That's big. Particularly if you owned it early, which I bought mine at $15 and $20. I don't have it. Those are huge moves. But if Railtown in the same time, using Steve's number, let's say Railtown goes to 21. I don't know. All of this is just, spitballing. But if Railtown were to go to 21 and Steve's average now, he makes 50 times his money. 50 times his money. So I know it's trying to look at the positives. Steve, maybe he did. He bought a lot too soon, maybe, and sold silver too soon. But because of the time he's been able to average down, I think you're in a great position, Steve. All of you are. Richard K., I hope you have a good weekend, William. Thank you, Richard. I hope you do as well, despite my impertinence toward you. Justin Babish, my first buy was 200 shares in December 2024. Look at this. Now I'm at 85,000 shares. I've been adding all across the price changes. For now, 39-cent average. It's beautiful, Justin. It's beautiful. That's a great position. I think everyone's going to want to marry you, even if you're already married. Scott Day, I read it was incorporated as Railtown Capital Corp in 2011 and rebranded to Railtown AI and changed focus to AI in 2019 and went public in 2021. So we don't know, because I just don't have time to read the filings. I will try to do that at some point when I can't sleep. It'll be in there. It'll be in a series of filings, exactly what happened. But what it seems like to me is Corey and Marwan went to banker or other financer buddies and said, look, we need to raise some money. We want to go public. Well, rather than going through you're so small, rather than going through the IPO process, which can take a long time, it's very expensive. You have to write up all this and that. Why don't we just go acquire an existing shell? And I think you'll find that's what happened. Or they arranged for Corey and Marwan to go into management at Railtown Capital Corp. I would have, when I first saw the name Railtown Capital, I would have assumed it was Corey that set it up. But I just read you the prospectus, it wasn't. So this is a way of taking a small company public. And you say it's not a reverse merger. I think it's essentially that, but maybe it wasn't technically that. And they went public in 2021. I'd have to check that because I think Railtown, I just read a prospectus. Oh, I see. That prospectus could still have been a company. No, it would be public. I think what happened is they listed on the CSE in 2021. But guys, can I just beg off of that? We spent a long time on it. I just don't know that it changes where the stock is headed. But I'll try to look into it, Scott, so I can give you a better answer because I've been wrong. Here's Gargle the Marbles. If Rail Tits if Rail Tiz hits 5 in May, could you commit to making a rap music video to celebrate? No, I don't know how to rap, and I really don't want people celebrating at 5. My target isn't 5. My target is a lot higher. What I'm afraid of, Gargle, is that people are going to be convinced to get out. And you know, everybody's got to have their own money management. At the end of the day, a stock certificate is just a piece of paper. What's his name? Howard Hughes. He fought the government for years and years and years that he could own TWA and something else and something else. And they said it was a monopoly, and he lost. So the government forced him to liquidate his TWA position. I think it was like at $103, but that's not the point. He had to sell everything. And that's the first time he became a billionaire. He wasn't a billionaire before that. Something like a year or maybe 2 years later, TWA was $1. And so a lot of life is, and prices is a little bit of luck. And we have to be aware of that. But I believe if you're treating Railtown as, hey, let's celebrate when it's 5, you don't know the story. AI is pretty simple in one sense right now. It can change, but AI is pretty simple. Everything that ever was written using SDKs, software development kits, particularly applications, but everything that was written from the 80s onward has to be replaced with software that's written with ADKs if you want to keep up or updated. That market is the largest market in the world. It's something like $300 billion spent annually, and it's growing. And on top of that, the software development business is moving from humans to agents themselves, agents working with agents. That's agentic AI. The entire business out there populated in the past by Apple and Dell and Microsoft and Oracle and IBM and Linux and whatever. All of it has to become AI. And if you accept that enormity, then you ask yourself, how am I going to invest in it? Well, in the United States, the only way to invest in AI is in the big hyperscalers or the big companies, or if you're lucky to get into an IPO, or you get into a fund or a wealth manager pool. That's the wrong word. Managed money pool. And you have a sprinkling across everything. But to invest in a LangChain or a Cohere or I can't think of the name. An OpenAI, the other one, Anthropic, or a dozen of competitors to Railtown, you can't invest in them. They're not public. They're in the hands of private equity. You can't do it. You could go buy some land and hope a data center gets built there, but you missed that boat. So how do you do it? I suggest you two ways. One is you accumulate energy and assets because it's going to inhale energy. But even that's derivative. Or you can buy Railtown. Railtown, as we just discussed, went public, or they took over an existing company and then raised money in 2021. And they were coming down here to raise money, but they didn't do it. Thank God. Otherwise, it would be an MULN or an MMAT or a TRCH that the shorts would destroy it. But they don't have their hooks in it that way. So it's one of the rare cases where we can actually buy AI. Okay, so those are 2 points. Third point, how is AI getting valued? Is it just like the dot bombs? Is it just like Tony taking a gander at AME? Idiot analysis? Not really. Facebook, who I think has cash flow of 50 to 70 billion a year, NVIDIA, who has huge cash flow, Microsoft, who has huge cash flow, Amazon, who has huge cash flow, Oracle, who has huge cash flow, getting a little extended, IBM, who has cash flow, they're all investing in AI. They're building the future as if their lives depended on it. And companies are doing it, countries are doing it, as if this is the new economic battlefield. And it is. So these companies are in an arms race to build on their own, but also to acquire existing technologies that have been created in just a few years to build their stacks, to build their platforms, to have their silo, or to go across all the internet because they feel it's existential to do so. And the amounts of money are not millions, they're not billions, they're hundreds of billions, they're trillions going into it. So then you ask, well, how's it all going to work? How's it all going to work? Well, nobody knows for sure. But there's this layer, which is evident by the funding that LangChain got and by all the competitors and Google ADK and AWS. There's this layer that makes it run smoothly. And there's different names for it: engineering software layer, orchestration layer, or the framework layer, orchestration, governance, and something else, framework layer. It's the hottest space in AI right now. And you can make fun of the name all you want. It doesn't matter. It really doesn't matter. Doesn't matter what I say. It's happening. So what is the metric on that section of the market? And the metric is revenues. And the multiple, just to cut to the chase, the sweet spot of the multiple is 35x. Now, that means there's a wide range around it, 35x. For companies who have high earnings on the high margin on their revenue. Railtown has the highest revenue margin. Now, what do we have to fill in, Gargle? What do we have to fill in? What Railtown's revenue is, exactly. And we don't know what it is. So we need to fill in what is Railtown's projectable future revenue and how rapidly is it growing. Those are two things we don't know right now. But something's going on because there's still a news blackout. I mean, you can assume they're doing nothing. But I think the evidence points out that they're very active. Corey's at conferences, and the BlackBerry guys just invested. They've got hackathons going on. I think the evidence is they've built out an advisory board. I think the evidence is they're pretty busy. So what you do is, as I've done many times, Gargle, you look at the AIP network is just a cut to the chase. Yet let's use 2030 numbers, 2030, 4 years from now. The AIP network via the TELUS data center likely to bring to Railtown 50 million a year in revenues. Once it's in, it sticks. 50 million a year, all net. 2030, I would say it's really safe to say that the TELUS customers will be running at least $1 billion through that data center and using a split of 20%. I mean, I don't know what it is. 15, 30? I don't know. 20%. That's 200 million. So you're at 250 million in 2030 and growing at one data center. Now, the one unique thing is the AIP is not going to go to other data centers. But what multiple should that get if it's growing and it's 100%? Well, at 35, Gargle, at 35, 250 million at 35 multiple gives you $8,750,000, $9 billion. And remember, the multiples Currently, multiples change. Market sentiment changes. But currently, the multiples are for forward revenue, projected revenue, and they're trying to give you an idea of what you should pay now against that future revenue. So 9 billion now. That's $38 a share. Why would I be making a rap video at $5 to celebrate? One data center, of course, I used a 35 multiple. Let's cut it in half. It's $19 a share. Why would I celebrate at $5? And why would you get people celebrating at $5? Because you want them to sell. I don't want them to sell. For that reason, just an arbitrary reason. Hey, it's 5. I better sell. Doesn't make sense to me. You got to know the story. Why are you in it? You're not in it. You're short. But the reason you're in it is the magnitude of this technological change. To many observers, it's the biggest technology change in 150 years. To many well-researched Wall Streeters, it's going to create the most wealth in history. Well, we'll test those theories. But it's so, the market is so large and growing, it's hard to compare it against all these other stocks that you day trade. They're all just empty. The reason this is down, it went public. Thank God, so we can buy it. The other reason it's down, it's in this quiet period. I know that's the wrong word. So the shorts, and when we say shorts, everybody makes fun of us because shorts does not describe the problem. It is a institutionalized, systemic, across the board steal job from the top down for any company under $5 that needs capital. It's just a fact. Well, that's the other reason we're able to buy it down here. There's been no news of bang, bang import, and the selling just never lets up. All right, so you can take your attitude or Richard's and say, well, it's Eeyore. It looks like it's going to rain in a couple of days. You can do that, but you cheat yourself of making money. Why own Railtown? Because it's going to trade to $5? You're going to miss out. The reason to own Railtown is to participate in the move of the enterprise value of the company as it reflects future revenues and growth, which is usually measured by a multiple against those projections. So that's going to be a moving target. Everybody's going to have a different opinion. But at $5, you're talking probably about $1 billion company, maybe a little more, a little less. I think Lang Chain at 1.25 billion translates into $5.50. Well, if all you think Railtown is worth, I guess you celebrate. I don't. And I've got to remind you that 9 billion I just said is one data center. It's one telecom. It's one government. That's how I see it. Giuseppe, I think Gargle is Lion Sheets or whatever. Same guy, and he wastes our time. Yeah, that's a good point. Gargle, Why are you attacking me, Giuseppe? I'm here for the Railtown excitement. No, you're not. Bob S., I've owned 11 pieces of real estate and I've made good money on them all. Bravo. I've always been star-crossed. Unknown monster, and that's 14 monster boxes. Where did you keep it all? I don't think it was 14. It was almost that many. Frankly, I kept it in my basement. But I sold a lot of it to, anyway, there's another project I did, that same young kid told my investor not to do it, and then the investor didn't do it when but then that kid, the developer, the guy selling it to me, Sir Charles, I met him out. He said, somebody called me and wanted to buy this from me. And it was the young guy. Yeah, anyway, that whole thing, I went with a hard money group instead. And sort of, I don't know, about 7 investors, maybe it was 9. And it was just nearly unworkable. And the hard money, anyway, the architect was a woman, and she and her partner had done great work. We had to get it all through approval. We got approval for the 3rd floor, and we were the only one on the block that got that. A booming area of town. And the deal with the hard money lender was that we had to have the architectural drawings finished before they'd release the money to start construction. And one of the guys who agreed to put up, in my little consortium, agreed to put up 30 grand. He only put up 15. And I didn't think that would be a problem, but when we got to that point, I needed 5 grand. That's my memory. Might have been a little less, a little more. And I went back to the hard money guys. I said, can you just advance that? I've asked every single investor to put more money in, and they all, because they listened to this one real estate agent who was an investor, very nice person, but not the brightest. She got on a conference call and said, those comps, they're wrong because those are brand new buildings. Ours is a rehab. Well, and that's what eventually happened. We had to gut it. But in DC, you got to save the parts that are historic. But it's all brand new. It's just an idiotic thing. But anyway, people didn't want to put up more. And I said to each of them, well, this means it's going to die. And I said to the hard money guys, I said, if you don't do it, you're going to kill your customer. Well, we don't care. And so I went to the architect. The thing is, the architect had promised to finish for 10,000 more or 12,000 more. And I sold some of my silver and I paid it. It might have been the majority of it. I can't remember because it was coming down. I paid that amount. And that was the guy the guy said that would be good, but the woman, she said, no, you got to pay everything, or we're not going to do any work. So I went in to see him, and I got on the phone with him. I said, you realize if you gave us the drawings, they're finished, the money's released. Number one, I can then go to the investors and get additional money from them. But you would realize you're going to kill the project. She wouldn't move. Just something about her brain. So they didn't give the plans. I couldn't give them to the hard money guy. And, I kept trying to go back and forth, but it just all turned into I don't know. It's weird. But I didn't have the money, frankly. I look back, though. Maybe I could have sold my stereo or I lost everything anyway. I just sold my rugs, sell my art. But at that point, I wasn't thinking that way. So we got sued, and I had to fight it. And that fight cost me something like $70,000 or $80,000, which I paid for. I didn't ask anybody else for money. And of course it was shit. But where did I get the money? I had to sell my silver. That's one example, Steve. Giuseppe, Steve, Joe, Marty, everyone, when Railtown hits its stride, we're changing our lives and achieving our goals. Yeah. But going back to one thing I was trying to say, if you get in an investment, you should try to have a theory about how much it's worth. And listening to these day traders is noise. And I really believe Railtown's an on-off switch. It's not like it's going to go slowly up, get to 5, and then its business proposition is going to fail. Unless we're hit by an asteroid, or there's a chance maybe Anthropic puts a team and gets a better you can always come up with scenarios, and we got to pay attention for them. But if right now there's no visible revenue with Railtown, nobody knows the story, nobody believes the story. People think that Langchain has jumped to the head of the crowd, or technology is moving so quickly. Railtown's missed its chance. There's something wrong. Whatever people think. And then there's many people here that point out about revenue. Fair enough, of course. But when Railtown is no longer in the paradigm of going out to conference by conference to pick, they still do it because they work hard, but conference by conference to go one customer. They're on top of this giant business model that 10 or 20 or 30 billion dollars have been poured into. All these major companies have a vested interest in it working, not for one customer, not for 10 customers, not for 100 customers, for hundreds of thousands, if not millions of customers. And Railtown's right there at the apex. Actually, I think Railtown's it's the synapses in the brain that keep it all firing. So my point is, when revenue becomes visible and when revenue starts, it's not going to be a question of, well, can they make it to $5? And once they're at $5, we better hold off, because then they still have to prove it's not that. Ceteris paribus. It's not that. when the awareness comes of revenue, it's going to come on like a freight train. And I apply that thinking at higher numbers too, although it gets tough. I mean, we all have to have money management. And when you have wealth, like Steve, I think will, you have to start thinking about a little bit of diversification. We've all learned the lesson that in the right circumstances, things can, decline. But we're not there yet, so we don't have to think about it yet. I gave an example, but let's just keep it simple. What if the TELUS data center in a few years results in 150 million, ignoring AIP, 150 million annually and growing to Railtown? And what if over the period of the next 2 or 3 years, Railtown signs up a total of 10 of those similar situations? Only 10. So that would be 1.5 billion in revenue, and from here on out. That's a $52 billion company. That's $229 a share. Now, I don't know. We don't have enough information that that's going to happen, but it's possible. And there'll be research, and there'll be institutions making those statements. We don't have to know it right now, but it's possible. So using that number, that's $229 a share. So why would I sell at 5? Why would I reduce at 20? Unless you need the money, there are reasons. But that's why I just get so tired of these know-it-alls that come on and I would take my money off the table. That's day trading thinking, and I just don't want you guys. This is potentially, and that's why it's cheap. If it weren't potential, it wouldn't be cheap. But this really can win back all the money you've lost in this awful experience. The lie that is the United States junior markets. And there's a distracting phone call. So my point is, if you have a valuation of the company and you believe it, you can adjust that valuation, but you know whether the stock is undervalued or overvalued. And we don't have enough information, but I'm giving you an example that's completely reasonable that tells you the stock could be worth $200 a share. I'm not projecting, and my target is 55. But as we go along, get more information, it's all possible. And the key thing is the bottom isn't going to fall out of this stock. Now the bottom might fall out of the market at some point. Look, I can't factor in every single item right at this moment, but that's why I react to those. This isn't this isn't G-Bucks. This isn't AME. Good going, Bob says. Eric Bellinger, nice. Giuseppe, we used to say around here, we're pulling out of here to win. It's a town full of losers. Pulling out of here to win. Screen door slams. Mary's West dress waves. Like a vision she dances across the porch as the radio plays. Hey, it's you and I want you only. Is that what he says? Come as Roy Orbison play. Anyway, I forgot it. Unknown share count is 2 million even. Wow. I don't have that. That might bump us up a bit. I'm proud of you. You should be proud of yourself. It cost a little bit more maybe than it should have, but you should be proud of that. That's unbelievable, Steve. It's unbelievable. Steve, I work midnights and it's really taking a toll on me. Just praying to get off midnight soon. I'm 75 pounds overweight and just exhausted. Yeah, I got to lose weight too. You do need to lose that weight by the time you're my age. But it's not the first thing you have to do. Joe Marty, agreed, Giuseppe. Bob S. Crazy, Steve. Good for you. I'm proud of Steve. I really am. That's amazing. I mean, on the other hand, Steve, you did sell ZJYL, so you did a lot of things just perfectly. Ward Richardson, good afternoon, William and RT crew, just getting in. MC 888, most disruptive companies will spend 1 to 2 to 3 decades before they make their first dollar. And every one I know became a unicorn. By the way, Railtown, all right, hold that thought. Steve says, I was looking last night for S&Gs and sold 100K of paper silver, bought RT at 58 in July. I'm just talking. Crazy silver went to 120. I know. Steve, I can tell you some other stories. I really anticipated building a position in silver last year, but you know, life's in the hands of the man from Tennessee and the man from above. Please come to Boston. She just said no. All right, so Ward says every unicorn these companies took 10, 20, 30 years before they made their first dollar and they all became a unicorn. By the way, Railtown is on sale, 3 for $1. Grab them while you can. Steve, I agree, Ward. Ward, to Unknown Stuntman, good job. Ward, Unknown Stuntman, thumbs up. Ricky Brogan, if I hadn't bought Amex and lost 134, I could buy over. Yeah, exactly. I'm in that boat too, Ricky. I'm in that boat. But hey, we got to go where we are. We got to go where we are. I meant AMC, yeah. Joe Marty, your Railtown expanded like your wife after you married her. Ha, ha, ha. I had to laugh out loud at that. Unknown Steve, stuntman. My wife will kill Bill if she heard that. Lots of laughs. Steve. I forgot I said that. Brandon Nelly. Hi, guys. Haven't been on in a while. Hi, Brandon. Why doesn't Railtown announce any earnings? They do, but there haven't been any. They have been timely in all their earnings announcements. And every month on the Canadian Stock Exchange, every month, they've made filings on time. And there's not much to say about it. There's 1,200 customers. All of their customers are basically for free. I mean, that's a model that has been around for as long as technology, that you go out, you get customers, and then you raise the price. But just to go over a couple of things, Brandon. February 11th of last year, Railtown announced that they were buying AIP Network Partners. And that was smaller then, but today is a group of about 200 companies doing $500 million in revenue. And they just own the network. They don't own each of those companies. But there's two strategies there. One is to roll up those companies a la Constellation Software and build a cash flowing, growing machine. They're not doing that yet because they're focused on the second point. But that's there. That is potential energy, and it's massive. But it needs to be executed and over time. Also, that group that probably can be estimated to spend certainly by the next couple of years, to spend $200 million a year and more on compute elsewhere. That's going to come to the TELUS data center, and it's 100% profit. It splits with Railtown. That's going to come back to Railtown. I would imagine if you use the numbers I just did, 200, 250, you could figure out that Railtown will start making back in cash what they paid for AIP networks in stock within a year. And then every year after that, every year after that. So that's a good deal. Secondly, the second item is during the quiet period, so-called, I don't know what word to use, of closing the purchase of AIP networks, which happened in November. During that quiet period, they probably because of AIP, we don't know, but they stumbled on an even bigger opportunity, massive. And instead of going customer by customer or cross-selling in that big network of AIP, they were offered, why don't you come on top of our stack at the original, the first, the biggest, the best, the 86th best in the world, AI, sovereign AI factory. And they leapt at it. Now that wasn't like, hey, let's have a drink, shake hands, drop your rig over there in the corner and get to work tomorrow and we'll turn it on. I assume there's regulatory steps to go through. There might be legal, who knows, but there's certainly you've got to, just like NVIDIA is, and probably a large language model, just like TELUS is, you've got to run that data center through the hoops. You've got to have trial runs and test runs and make sure that it can stand up to the full weight of full capacity. And if you're bringing on Railtown, rail tracks, rail engine, and conductor, you've got to install all that and make sure it works. And we know from their filings that they finished rail engine in January. We know from their filings that they finished rail engine in February. We might find out shortly next week that they finished rail engine in March. We just don't know how they're going to, or April. We just don't know what's going on. But this is building a massive computer that's going to process. I don't know even how to ask the question, but I would imagine it's going to process I would imagine hundreds of billions, if not trillions, of microtransactions as agent meets agent and spends tokens. And the goal of TELUS is to generate $2 billion from its AI-enabled technologies in a year and a half, by a year and a half. And I think a lot of that's going to be through this data center. Anyway, this blanket on news continues. I would suggest to you, Brandon, that the reason you're not seeing any revenues is most of their products given away for free to build, not only to build a customer base, to build the very agents, because the agents are self-learning. There's a reason they call them battle tested. They want people to use it, and those agents are learning and getting better. But the biggest reason is that the TELUS data center has not. Now you're going to Google it and you're going to find out that the data center opened in July of last year, and they have Canada Ernst Young, they have a healthcare company, and they have a Salesforce type company, and probably a couple of others as customers. So it is open for business. Fine. But they're not at capacity. They're nowhere near capacity. And at some point, TELUS is going to say, we're ready to ramp it up. So I think the reason you're not seeing revenues is there aren't any. And I think the reason you're not seeing any information beyond the filings is because the TELUS, whatever it is about this TELUS deal, or it might be something else, I don't know, I haven't heard anything, is material non-public information. So there's no research, there's no filing, but also it's a junior market company on the orphaned exchanges, the exchanges where the big boys and girls know that you shouldn't be buying any of these stocks. So, it's just underfollowed, underpriced, and there's no revenues, Brandon. There's none. It's just how it is. But what's coming? You got Uniserv, you've got TELUS, and you know what else is coming? They had it on their LinkedIn page. These hackathons. They went at one of the conferences, they had a hackathon, and that day, 2,300 developers signed up for free. For free. There's no revenue in that, Brandon. There's no revenue. But I don't know where it's grown. Maybe that's it. But reportedly, everyone loved it. So I imagine that number is continuing to grow. Well, what happens when Railtown decides, like all service providers, they let you in for free? It's like a drug pusher. They let you in for free. You get addicted to it. And they say, hey, you reached your maximum for the month. Well, I'm in the middle of something. Well, you can do basic for $5 a month, pro for $25 a month, max for $30 a month. That's the chat box or whatever. And you can do enterprise level for $195. But I don't know the pricing for these data centers or for dev teams. But at some point, when they build up the free user base, just like any other startup, they're going to start thinking about a subscription model. The only other choice is advertising, and I wouldn't count on software developers to pay attention to advertising. They'd probably shut it down. So the only choice to make revenue is a subscription model. But it's the age old. You get the customers first, or do you charge first? You want them to come in and test the product? Anyway, Brandon, there are no revenues. That's why you're not seeing any. Ward Richardson, RT Software, William, will cover all 11 sectors of the market plus defense and government spending. RT has the stack that will accommodate the entire software industry. Amazing. Amazing. Ricky Brogan, I'm very excited with Railtown and the shares I have. You've got a great position. All of you do. Some of them are, I looked at it the other day, some are like 1,000 shares. They're all great positions. Ricky Brogan, have been thinking about taking a HELOC to double my position. I don't know, Ricky. I don't know. Only you know your situation. If you can make the payments for the next 12 months to 24 months, and you're willing to tighten your belt, I would do it. But what I would do, since you're borrowing money, the problem is now that silver's expensive, it's going to be volatile. And if you don't have a stomach for it, you might sell when it goes down. But if you can have an attitude of riding it out, either silver or gold or both, there's still this little project that I'm going to raise money for, where you're just paying the cost of mining the gold and you get the full price of gold in November. But I might hedge it a little. I might just hedge it a little. But Ricky, if it were me, I'd do it. But I don't know your situation. If it were me also, I would have a rough idea of what events, not necessarily price, but what time frames I would look to sell it down to pay off my HELOC. You don't want to get overextended in your life. You've got plenty of a position, but I would do it because, I feel like we know the story, and sometimes you have to concentrate everything on something, but I think I would do a hedge, probably silver, or a project that would give gold, something that, if everything, that 5% chance, that fat tail, that everything goes to shit, that you're not left with a huge mortgage for the rest of your life. Anyway, Hawaii bought 150 more. Wow, look at that position. That's a nice position. That's not all right. I'm going to try to read what it's not very long, but it's a concept I woke up in the middle of the night about, and I haven't been able to get it out of my head all day. I'm not sure it's correct, but I don't think it's wrong either. Good for you, 808. You guys are amazing. 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 All right, let me show you what I had if it's still here. I get so worn out. Why do I get so worn out? I've been on the phone. Maybe that's it. All right, it's only 5 pages. Doesn't that thrill you? It's only 5. But here's my idea. And I asked the computer, am I way off base? It looks like I didn't save my question, but I think the answer will show you my train of thought. Your instinct is sharp, and the analogy is better than you think, but let me give you the honest version and the pushback you asked for. The analogy holds. Visa and MasterCard don't own the stores, the banks, or the money. They own the rails, the authentication, the routing, and settlement layer. To me, when I read that, that sounds just like Railtown. The authentication, routing, and settlement layer sounds just like Railtown. But anyway, Visa, MasterCard own that layer that every transaction passes through. Their genius is they get a small, nearly invisible toll on an enormous, growing, and repeating flow. The fees compound because usage compounds. If Railtown becomes the middleware layer that sits between sovereign AI compute and the applications/agents consuming it, handling orchestration, context management, governance, logging, billing books, then yes, every inference call, every agent-to-agent handoff, every data retrieval that runs through Railtown's platform could theoretically generate a micro fee or a licensing royalty that is structurally similar to interchange or what Visa and MasterCard do. And then I asked about the size. Global card payment volume look at this number. Global card payment volume runs at roughly $50 trillion annually. 50 trillion. Visa and MasterCard together collect somewhere in the range of 0.1 to 0.3% of that in net revenue, which is tens of billions of dollars per year from a fraction of a percent on every swipe. The global AI compute market is projected to be hundreds of billions, not trillions, I guess, within a few years. And if agentic AI takes off the way proponents expect, the transaction volume of agent to agent calls, listen to this sentence, the transaction volume of agent to agent calls, the transaction volume of agent to agent calls could dwarf human initiated queries. Amazon, Microsoft, Google already charge per token, per API call, per second of compute. If Railtown sits in the path of that flow and takes even a fraction of a fraction, it's a compelling number on paper. And now the computer's going to push back on me. Well, fair enough. They can push back. Everybody else does. The Visa analogy only works if Railtown achieves something Visa has that most tech companies never do. Captive infrastructure that can't easily be routed around. That sounds like Railtown at TELUS. Who can route around TELUS? And if Railtown's neutral on top of a lot of different telecom data centers or government data centers or business data centers, it seems captive. Visa works because merchants, banks, and consumers are all locked into a shared standard. The danger for Railtown is TELUS could decide to build this layer themselves, okay, or license it from a larger player, okay, once the proof of concept proves the concept. Well, TELUS is busy building their business. They don't have the time or the resources to build it, is my estimate. And then to license it from a larger player, are you going to go license it from Google? You're trying to build your competing stack. This is logic. Well, it's not logical. Microsoft, Amazon, and Google are all building their own agentic orchestration layers. Yes, they are. They have every incentive to be the rails, not pay a toll to someone else. I agree with that, which is one reason why I think they're the logical buyers of Railtown. And it's too much to predict. The sovereign AI factory concept is real, but sovereign means governments and national telecoms. Sovereign means governments, and national telecoms will want to control the stack, not hand a Wyoming registered AI startup a permanent toll booth. Okay. That's how it looks right now before the TELUS Ramathon, before TELUS ramps it up, Rampathon. So the question isn't whether the model could be huge, it's whether Railtown can get to contractual or technical lock-in before a larger player either acquires them or builds around them. I agree. I mean, that summarizes the risk. But I think what the computer doesn't see is they already have a contractual lock-in with TELUS. At least that's my information and belief based on public info. The proof of concept with TELUS will be a make or break moment. I kind of agree with that too. Not so much that I'm worried about the contract, but I'm worried about this, if there's a glitch. But I don't think there will be. And that goes back to Brandon's concern. I think the company's smart, all 3, 4, 5 companies, make sure that it works. I'd rather wait than dribble out some revenue news, and then because you hurry, the stack doesn't stack up. TELUS could decide to build this layer themselves or license it to a larger. Yeah, I already read all of that. The proof of concept with TELUS is the make or break moment. I agree with that. And it's already priced like it's going to break. If it works and the contract gives Railtown durable revenue rights rather than just a one-time implementation fee, the analogy holds. Well, we already know they're not just getting paid to install it. If TELUS treats it as a pilot they own, Railtown is an interesting vendor. Railtown isn't the rails. The framing you should keep. Your instinct to frame this as an infrastructure toll revenue on compute transactions rather than software licensing is strategically correct. I didn't use those words, but I guess they translated my question. That's a much higher multiple business. It's how you would pitch it to a serious investor, not an AI software company, but a compute transaction middleware with recurring toll economics. I like that. I think this computer has a future. It's going to make a lot of money. So you frame it as a compute transaction middleware with recurring toll economics. The question is whether the TELUS contract, when it materializes, actually reflects that structure. So it's worth asking Corey Bandolini, is the revenue model transactional per compute event, or is it a flat software fee? That answer tells you whether you have Visa or just another B2B software subscription. What's with all the negative vibes, man? What's with all the negative vibes? So I asked another question. You've just sharpened the thesis considerably. Let me build on what you added. The no further cost to incorporate the technology point is underrated. This is actually one of the most important characteristics of a Rails business. Visa doesn't require the merchant to rip out their point of sale system. The integration cost is low. The switching cost after integration is high. If Railtown drops into an existing sovereign AI stack without requiring infrastructure changes, that's the same dynamic. Easy in, hard out. It's better be hard on the way in. That's moat language. Neutral is everything. You named something critical. Visa works in part because it's not Chase, it's not Citibank. It doesn't compete with the participants in its own network. If Railtown is neutral infrastructure, not owned by TELUS, not owned by a hyperscaler, not aligned with any single model provider, that neutrality becomes a feature that TELUS and future sovereign clients actually want. A Canadian telco building a national AI factory probably doesn't want Microsoft's orchestration layer sitting in the middle of it. No shite, Sherlock. A neutral Canadian headquartered middleware company is a much more comfortable answer politically and commercially. No shite, Shitelock. The Diners Club point is exactly right and sobering in the right way. Diners Club invented the category and still lost. But notice who won. The players who achieved network ubiquity first. And that's why I don't think these other people building a competing product, they don't have time. This is scaling so rapidly. But we'll find out. You know, there are things they got to run the race. Visa and MasterCard won because they got to enough merchants and enough card issuers quickly enough that the network effect became self-reinforcing. The competition risk for Railtown isn't that the model is wrong. It's purely a race. Exactly, but it's a race for all these bigger guys too. First sovereign factory, then a second, then the standard starts to set itself. Do you see the investment theory here? I didn't write all, I just asked a few questions. So what this thesis actually is, stated plainly, Railtown is a bet. One, agentic AI compute becomes a high volume transactional flow, not just a software service. I think we know the answer there. Two, sovereign and enterprise clients need a neutral orchestration and governance layer they don't have to build themselves. I think we know the answer there. Three, Railtown gets enough nodes quickly enough that switching becomes painful. Well, we don't know that yet. Four, the revenue model reflects the transactional nature per call, per token routed, per agent handoff. We don't know that for sure. We have no idea. So we're waiting on that. If all four are true, you're not valuing this as a software company. You are valuing it on payments, infrastructure, multiple. Those are very different numbers. And that's what I think. The honest remaining question. Diners Club had strong IP and first mover position. What finished them wasn't competition on features. It was that Visa and MasterCard got bank distribution. Well, what about getting TELUS distribution? What about getting a few other, companies or countries distribution that Diners never could match? For Railtown, the equivalent question is, who are the banks? Where's the beef? The sovereign AI factories are the merchants. The sovereign AI factories are the merchants. TELUS is merchant number one. But who are the entities with enough reach to make Railtown's network ubiquitous before a hyperscaler decides to clone the rails? That's a fair question. I think a hyperscaler would buy them first, but there's so much money here. You got to be aware that people are going to try to create their own competitor. That's the strategic gap worth watching and worth raising with Corey. Okay, one last one. And then I said it might be Anthropic. Anthropic might be the banks. That's an interesting thought. Sit with it for a second because it has real logic to it. Anthropic, OpenAI, Mistral, and the other frontier model providers have a problem that doesn't get discussed. They need sovereign and enterprise clients to trust the stack their models run on. A neutral orchestration layer that isn't controlled by any one of them is actually in their interest. They don't want to build the rails. They want their models on the rails. So if Railtown becomes the layer that sits between compute infrastructure and model providers, it's not competing with Anthropic. It's making Anthropic more deployable in sovereign contexts where government or national telco won't let a US hyperscaler own the full stack. Anthropic gets distribution it couldn't otherwise access. Railtown gets a powerful legitimizing partner. The Visa analogy then becomes almost exact. The banks didn't build Visa, they funded and endorsed it because it served their distribution interests without threatening their core businesses. If Anthropic or a consortium of model providers quietly packed Railtown's expansion into sovereign AI factories globally, the neutrality is preserved and the network build out gets rocket fuel. It also solves the Diners Club problem you were just wrestling with. Diners lost because it had no bank partners. If the model providers become Railtown's bank, endorsing the rails because it serves their reach, the network effect has a very different trajectory. Anthropic is already deeply invested in the idea of safe, governed, interpretable AI deployment. A sovereign, friendly, neutral orchestration layer is philosophically aligned with that mission, not just commercially convenient. So I don't know if I get credit for that line of thought and my questions. You didn't see all my questions or not. Doesn't matter. If Railtown expands, and I'm thinking I should send that to Corey, but if Railtown expands, I'm sure he already knows it. If Railtown expands such that they're using, do you get it? Diners Club was the first, card so you could go to restaurants. You guys don't remember that. I do. I had one. But Visa and MasterCard and some others, and it wasn't always called, there were some other, I remember some other weird names, but they all consolidated. They got the banks to be their distributors or to align with them. So then the restaurants, I don't have the vocabulary, the restaurants and the stores obviously wanted to use Visa or MasterCard because that doesn't work. Because they had the distribution. That's what I think can happen here with Railtown. It's 7:00. I'm going to end, but just think of Railtown. Possibly, we don't know what their revenue model is, but how does TELUS make money? I think, I don't know. I notice on my subscriptions, what happens is they spend, as they're working, they spend tokens. And I just figure that's how they're going to do it. So anyway, one idea, I don't know for sure, is that as people use the data center, as the companies use the data centers, as development teams use the data centers, as agents use agents and use the data center, and as they ping or spend these tiny little fractions via tokens and credits, Railtown gets a piece. I'm guessing. We'll find out. Maybe Railtown just charges a one-off fee like the computer said. I don't believe that. That would be stupid. I don't think Railtown guys are stupid. All right, so that doesn't work. All right, I guess I'm done. I'm going to wish all of you a good night, and we'll reconvene tomorrow. Thank you to everybody. That was I can't believe it. I think we're moving. We're now moving toward 20,500,000, maybe to 21 million. But anyway, that's it. I'm going to stop. See you on the morrow.